Welcome back to this FinGraphs market overview in cooperation with Dukascopy TV. This week we will look at the euro-dollar, dollar-yen, gold, and the S&P futures. We will be using our fingraphs.com tool to analyze trends in the market. Let's first turn to the euro-dollar. Last week, Draghi surprised. He was a bit more conservative on quantitative easing than the market expected. That said, non-farm payrolls came out above expectations, which is leading the way to a rate hike in the US. This is the reason why we believe that the strong move last week on the euro-dollar is probably a temporary setback for the dollar, but that the trends remain in place. We will consider this on this investor's view of the euro-dollar, which is a combination of a weekly chart, or 1 point per week, and a perspective over the next few quarters, a daily chart, or 1 point per day, or the perspective over the next few months, and an hourly chart, 1 point per hour, or the perspective over the next few weeks. At the moment, both the longer-term weekly and the medium-term daily are still in downtrends. The hourly is correcting up, and hence the message says that we are in a potential intermediate bottom in a downtrend. Now let's consider these in more detail and possibly start with the hourly chart where the action was last week. What we could see is that we had quite a strong reaction on Draghi's announcement. The price projections are quite aggressive. We have quite a lot of volatility on which we calculate our targets, and they could lead us up to 111 to 112. That said, we believe that this projection is probably aggressive, and let's look at the daily chart. The daily chart is, on the other hand, still in a downtrend and is still leading to possible targets in the low 101 levels down to possibly 096 over the next few months. We did have an oversold situation in our risk index, and our envelopes were touching each other, so this reaction comes in a context of exaggeration. That said, can it really make it up to 111, 112 very quickly? We believe there's probably strong resistance to the upside. As you can see, the levels around 110, 19, 110 have served previously as strong support and resistance levels. So back here in July, early August, back here at the end of May, and as resistance already over here in March and April. Furthermore, the long-term context of the weekly chart is still declining. We are still in a long-term downtrend. The risk index are not yet oversold, and the targets are not done yet. They lead us down, possibly down to parity over the next few quarters. So we would still have the parity as our objective, possibly over the next few months or the next few quarters. Now let's consider the more shorter term view, which is a trader's view, which gives us an intra-week perspective. And we will look at here, we're looking at a 60-minute chart, a 15-minute chart, and a 4-minute chart. As you can see, the 60-minute chart has been correcting down since the reaction. It is still within the boundaries of what we consider a correction. And if we look here, we would still be supportive short-term of the euro as long as we don't make it below 107.50. Now, if we do make it below 107.50, we believe a longer-term scenario will come back into play, and that the hourly will sink in with the daily and the weekly. But until that happens, we are still positive over the short term on the euro-dollar. That said, the euro-dollar, following that correction over the last few days, needs to gain new momentum, and on the 15 minutes, it would need to make it above 108.90 to really prove that it could make it higher again. So what we could say, going back to this 60-minute chart, is that basically we've had a strong reaction, and at the moment the euro is having problems really following through on that reaction. We don't believe it is totally over, but have a stop sell signal around 107.50. Now let's turn to The other assets, which are also interesting, so possibly to the dollar yen. Dollar yen hasn't had that kind of a reaction, which means that most of the move was done on the euro. We can see that the weekly chart is still in an uptrend, the daily chart is still in an uptrend, and the hourly chart also is, although it is a bit exhausted. Now we could probably see a bit of consolidation here still, but all in all, we have 3 bulls and a potential continuous uptrend over the next few weeks, the next few months, and the next few quarters. Now turning to gold. Gold has also seen its reaction up following the announcement, yet the reaction is still very tamed, and you can see we have a long-term bear, a medium-term bear, and a short-term bull, so only an intermediate bottom and a downtrend. And at the moment, this intermediate bottom is failing to make it above the corrective targets to create an impulsive move. The levels, the outer boundaries of these corrective targets are around 1100. As long as we stay below these levels, we are in a very tamed consolidation. So still in a downtrend over the daily and the weekly charts. Finally, looking at the S&P. The S&P has 3 bulls, so a potential continuous uptrend. The weekly chart is a bit exhausted, but is trying to find some new momentum to make it to the upside. The daily chart is seeing quite nice potential over the next few months, possibly above 2150, perhaps up to 2200. At the moment, the risk index is not in the overbought yet, and the envelopes are heading up. Finally, the hourly has seen quite a strong test last week, but has recuperated very well, and we could still see an uptrend with targets possibly up to 2113, maybe into the 2140 level. We would put the lows from last week as possible interesting stop loss levels around 2050, 2040. And that would be it for today. Thank you very much.